Very warm welcome and welcome to HYCM's online trading workshop with myself, Giles Coughlin. I am a chief currency analyst and I'm just looking forward to taking us through the current session. Now, before we get going, I'm just going to take us over to the main screen and just to remind ourselves as we talk about different entries, exits, please take a look at this disclaimer because none of this is meant to be a trade signal service. Instead, this is an educational service. You look over my shoulder seeing how someone makes trading decisions from a professional trading background, and the idea is over time you develop those skills yourself. So these are the key issues we're going to be looking at. We're going to be looking at some European PMIs, the flash PMI data out of the UK, particularly looking at the Bank of England interest rate meeting on Thursday. That's going to be crucial. OPEC are meeting next week, and that is a near-term risk for oil. We'll be looking at the gold market and inflation from the US in the PCE print next Friday. So quite a lot to cover. So we'll go over to the third screen. I'm just going to very quickly run through where we are with markets as we started the week. Now, last week, do you see all this dollar strength we saw? That was as the Federal Reserve took a hawkish twist in their interest rate meeting midweek. So the expectations have now risen that the Federal Reserve are going to raise interest rates sooner. Remember, that supports the currency. And that they're going to taper bond purchases sooner. That supports the currency too. So the dollar strength is in play. Now, this week, we have a total of 10 Federal Reserve board members speaking over 16 individual events. 2 of those events have double bills, so 18 instances we're going to hear from Federal Reserve speakers. So first thing to note is we will get a sense of the dollar's movement mainly from the Federal Reserve speakers. Now, a number of speakers, members of the FOMC, have decided to increase interest rates sooner on the dot plot. So now we're going to get a sense of when they're speaking and what they're saying. This is what you want to look for. So first of all, here's a quick rundown of the hawks and the doves. So do have a look at this. You can always pause this and you can always screenshot this and look for yourself. But later on today we have John Williams. He's speaking today. Now he is neutral. Now last time on Friday we had James Bullard speaking. He's now hawkish. But before he spoke on Friday he was more neutral. So John Williams is a neutral. If he says a hawkish thing, expect that to boost the US dollar. So the first thing to look at is John Williams. If he says anything about sooner interest rates, anything about tapering bond purchases more quickly, anything that's read as hawkish, expect that to boost the dollar today back over those 92.50 lines. Okay, so look for that very carefully. That's the first thing to say. The second thing to say is we've got a couple of large option expiry levels. We've got one at 110 of 1.2 billion. And we also have a very large option expiry level on the Australian dollar Japanese yen pair coming at 81. So if we get any drops down to 81, expect buyers on a first test before the New York cut, which is 2 p.m. UK time. So look out for that. Now, in terms of like the broad risk profile, we're seeing downside in gold. Now, gold has been pulled lower as real yields have been rising. So if you take a look at this, you can see gold is the blue line, orange is the real yields. When real yields rise, that causes gold to fall. Now, what is real yields? Real yields is the US 10-year yields minus inflation expectations. So real yields have been rising because inflation expectations have been rapidly falling. You just take a look here, you'll see inflation expectations on the right-hand side have been rapidly falling. And you can see here, you've got we'll just get rid of, put the real yields up. You see, what you have here is the iShares TIPS bonds ETF. Now this is quite a good proxy for real yields. Now the pre-price is 12788. If that keeps dropping lower, then that gives some support to gold. But if real yields push higher, that will send gold lower. So what I'm trying to say is the #1 chart you need to look at gold is see what real yields are doing. See if real yields are rising, that's going to keep pushing gold lower. So as things currently stand, we would expect to find sellers on rallies. So any retracement up to that 1830 region, expect to be an excellent area for sellers at the moment. So look out for that for gold. Oil prices are broadly supported this morning. Now, the reason for that is that there's been some news that the US-Iranian nuclear deal has had another roadblock. There's more problems. So if that US-Iran nuclear deal gets agreed, expect oil to fall quickly. Why? Because it means more oil supply back in the market. At the moment, Iran is not allowed to give as much oil as they want into the market because they haven't complied with the US-Iran nuclear deal. And so if they comply with the deal, then more oil can come back in the market. So expect oil to fall. But medium term, we are expecting buyers. Why? Inventory levels are quite low and demand is expected to pick up as global vaccines increase. People are expected to get back to normal, cars traveling, planes traveling, etc., etc. So all that should support oil. Any deep pullbacks down to 66 looks good for potential buyers in the current market conditions. Bitcoin has seen some pretty heavy falls this morning, down nearly 10% into that key support level. Why? More regulation against crypto providers in China. So crypto mining facing more regulation, some more crypto mines closed down. There was also a headline coming out from, and I'll just show you here because I was covering the forexlive.com European session this morning, and central bank summons some banks on cryptocurrencies speculation. So also they said that Alipay asked to stay out of crypto operations. So that has resulted in some pretty sharp downside in Bitcoin. At the moment, this key region is staying. Now, if this level stays, that's what buyers need. Very key support. If this drops lower, expect a stops to be tripped on a break lower, and 20,000 is the next key support level. So massive level here in Bitcoin, really important to keep an eye on that. Okay, folks, let's go over to the calendar now. We've got a rough idea of what's going on. Not there. Calendar here, that's great. So very quiet today and very quiet on Tuesday. Jerome Powell speaking, that'll be important. Jerome Powell's quite dovish. So we are seeing a more hawkish shift out of the Federal Reserve speakers. Any sense of a hawkish shift from Jerome Powell, and that will send the dollar soaring. He is a dovish board member. He is the chairman, and you can see here, do just check out that. You can just check out some of his recent comments. Anything about earlier interest rate hikes, anything bullish, then we would expect that to really, really support the dollar today. Tomorrow rather, when he speaks, so look out for that carefully. Wednesday, we got some PMI data out of Europe. Now, the recent run of data out of Europe has been excellent, and you can see here, whenever the PMI data was above 50, that's showing expansionary territory. So pretty good data. Manufacturing for the last manufacturing at 64.4, excellent. 63 expected. We just take a look here. Germany is the engine house of the Eurozone. Now, if that keeps moving, staying above in that 60 level, if it's sort of 65 or 66, anything higher, that would be really bullish potentially for the euro, and it will start to increase expectations of maybe the ECB tapering bond purchases at their interest rate meeting. So this whole host of PMI readings will be helpful for the Eurozone. At the moment, the ECB are pretty much on hold. Do remember to check out my blog. I'll just check out the blog. I'll show you the blog here, and particularly check out this central bank section, because in this central bank section, I do outline a whole host of central bank meetings, and I go through the last central bank meeting there. You can just check it out. But essentially, what it tells us is that the ECB had quite a steady hand, a bit of a holding meeting. So that will mean that this next set of PMI data points, first of all French, then it's the German, then it's the Eurozone. Now the way this works is the most important data point is the German. And like once you get a sense from the German data, then that's also pretty much telling you what the European data is going to be like. So the euro moves from 8.15. So instead of seeing this as one, see this is like, instead of seeing as three different reports, it's more like one report in a way. So see it more like that. Big risk for the euro, good number support the euro. Okay, US. Now, data is going to be very important for the US now after the FOMC have made their hawkish moves. And investors will be looking to make sure that the economic data remains firm for the US. So again, manufacturing services, if that keeps showing upside, that will be excellent for the US dollar and potentially can give another boost to the US dollar. Again, look at the Fed speakers. We've got Bostic speaking as well. So looking at Fed's Bostic, just show you here. You can see he's hawk, so you'd expect him to say something hawkish. So it's not such a big surprise if a hawk says something hawkish. What we're looking for is looking for neutrals and doves to say something hawkish to boost the dollar. Okay, so that's what we're looking for. You can just use that crib sheet for your benefit. Now, the main event of the week is the Bank of England interest rate decision. Now, I'll show you how I'm trading this. I'm trading this by selling the euro pound into Thursday's meeting. So I am already short euro pound, expecting this to fall quite heavily into Thursday and beyond. I'm expecting the Bank of England to have a more hawkish outlook. The last two Bank of England meetings, and you can look at the meetings here on my blog and you can read that, but both of them were pretty optimistic. Now, nearly 50% of the UK population has been vaccinated. We've had reports that Boris Johnson is expecting us to come out of lockdowns now on the 19th of July. That's expected to happen. So as a consequence, I am expecting potentially bond purchases to be tapered and potentially interest rate projections to be brought forward. So I am looking for pound strength heading into and out of the Bank of England interest rate meeting. So that's, you know, something I'm looking at, and I think that's the best tradable opportunity of the week. And as I said, I'm trading it, again, not trading advice, but I'm just explaining, you know, in the anticipation of it, I'm selling the euro pound into that meeting because of that bias. Now, once we've had the that meeting, we've got GDP out of US, unemployment claims. Again, we want to see them continually and keep moving lower as they have been. Anything sort of above 300,000 would be supportive for the dollar. Looking at member Williams speaking, he is neutral, so anything hawkish will be a big boost there to the dollar. And we also have the inflationary data. Now, this is important for the Federal Reserve. If inflation is shown to be spiking high, if we get anything, you know, anything up towards sort of 2%, anything above 1%, and that will support the dollar as well. As Fed's Jerome Powell has said, you know, there's a slight chance that the Fed become, you know, a little bit too, you know, a bit too casual with inflation. So any inflation pressure at the moment, especially after the last FOMC rate meeting, is going to result in some dollar strength and anticipated interest rate rises. So that's the key events that are coming up into the meeting. They're definitely the key ones. Number one is obviously this asset purchases and selling the euro pound. I just want to show you something else. This is the Sony Futures. Now, the Sony Futures give you an indication of what interest rate expectations are. So you can see here, just see how they've been moving lower. Now, the way you use these Sony Futures is you take the base level 100, and then you minus this future contract price from 100. So in this instance, you can see that Sony Futures contracts for June 2022 is 99.77. So 99.77 subtracted from 100 equals 0.33. Now, the current Bank of England interest rate is 0.10 basis points. So you 0.10 basis points, take away 0.33 basis points. These are a total of 0.23 basis points. So that means that the future markets are pricing in 2 interest rate hikes of 10 basis points each by the Bank of England in June 2022. So you can see across the board interest rate hikes are being projected in. So that's what the futures market thinks for the pounds, you know, the Sony Futures. So that'll be very interesting, and expecting, you know, 3 interest rate hikes. Is that by the end of 2022? Let's have a look. Yeah, I think that's by December 2022. 3 10 basis points interest rate hikes. So the pound is, you know, expect to see a little bit of pound weakness, you know, in pound strength. I'm sorry, into that Thursday meeting. So look out for that very, very carefully. Okay, folks, I'm just going to throw it over to you. Any questions? Anything you'd like to ask me? Okay. All right then, folks. Okay, well, we've managed to summarize things very quickly this week. It is a lighter calendar week, and as I said, the Bank of England is the most important decision. I will run through on Wednesday at the workshop exactly how I'm going to trade that, and you won't be in any doubt. So if you want to come along, do come along to that, as I help us get totally ready for the meeting. Thanks now, and take care. Goodbye.